Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, February 14th, 2016. I hope you guys are having a fantastic weekend. Happy Valentine's Day to everybody, and let's get started. So the flu is out of me. That's good. You can tell my voice is still a little a little harsh, but it's overall I'm feeling pretty good. So sorry about missing whatever I did last week, and let's get started. So I was anticipating that we were going to get some type of wave B up, which is with this move here. And it was, it's going to be some type of, short covering rally. And Friday we had a really, really nice rally off of it. And it should continue, but we're at some areas right now where we closed on Friday that it's resistance zones. So we know just from history that one or two things are usually going to play out. Either we are going to get a pullback off of it, or they're going to gap over it. So it's very rarely do we see us open underneath the resistance, and then throughout the day they push through it. They either come back and then move up, or they gap over. So we're gonna have to kind of wait and see what they decide to do. There's a really a reason that I can make for either really route they take, because there's some bearish divergences on the short-term charts, but we have the bullish divergences on the daily. We're very oversold right here, and we're still, believe it or not, if we look at the 60-minute chart, still have plenty of room to go before we get into the overbought levels. So there's plenty of room, there's plenty of gas in the tank to move higher if they decide to gap over. But no matter what it is, I'm still anticipating that we're making this wave B, and I have it right here. Doesn't mean it has to go this high. What we do know, there's a gap at 2044, so there's a chance they could try there because it's also a moving average. But we have resistance at 1950. We have the first moving average at 1966. So there's plenty of hurdles that the bulls have to get through before you start looking up here. And what we'll do is really just eye things down and monitor them as we approach resistance zones, and maybe take a little bit off, and then if it pulls back, add it back. And then once we start seeing bearish divergences and things start getting into the overbought levels, then we cash out of the long side and wait to start looking for a short trade. So like I said, we have bullish divergences on the daily. This is something we have not seen in a real long time, and there's reasons that we should be heading at least someplace up into the 1950 level. Now on the 60-minute chart, this move right here gave us a real nice bullish divergence on the 60-minute chart. We went a little bit below this support that set up the daily divergence, but you can see it held, and then we came back up again. So the first resistance, we're pretty much right there, 1862, or a little bit above it right here. If they break above that on Tuesday, then we want to keep an eye on the 1872 and the 1880. This is your, say, next little resistance zone. If they get through that, then we're looking at a move probably all the way up to the 1903 level. So we're at the first, say, testers for the bulls. If they get through these, then we anticipate that the next, it's going to continue up into the 1903 level. Now, if we look at the 15-minute chart, you can see that we broke through the first resistance line right here, came back a little bit, and then came back up again. And we're right at the second resistance line, a little bit above it. So if they start breaking above it, this is giving us the clue that we are probably making that move someplace up into these levels here. So if they pull back, then we could see some backing and filling, all the way down to the 1842 level or 39, because that's the moving average. And as long as that holds, then we're still anticipating that the next move is going to come someplace up to these levels here. So you can see that we do have bearish divergences on the 15-minute chart here, where this was the high. We made a higher high on the price, but the price oscillator made a lower high. So we have a bearish divergence. We're right at a 38% retracement level. We're right at a moving average, and we're also at this at the resistance line. So this is your challenge for the bulls. If they break through it, then we start looking at the 1878, and again, starting to scale out in these levels here is probably not a bad idea, at least for half the position. And then if it comes back, you buy that half position back, and then just keep doing it until we start seeing bearish divergences on the 60-minute chart. And that's when you really start, say, scaling out of everything, and then just be patient and wait for to look on the short side. But like I said, I still think there's there's time left for the bulls to move to the upside. We're just at an area right now where we could anticipate some type of pullback. So on a 5-minute chart, what we want to do is look and see where support areas are, and you can see we have bearish divergences. So our first support is 1852 to the 1851. Below that, then we're going to the 1834. If that gets taken out, then we're looking at a deeper retracement that could come anywhere between the 37 and the 30. And really the main line in the sand, which I'm not really anticipating it getting down here, is the 1821. But right now, if we get a pullback, I would anticipate that the bulls are going to try to defend the 1843 and then the 1837 level. So right now, like I said, I do believe there's more room in the tank for the bulls to move higher. A target area would be someplace up into the 1944, maybe even the 66. And an outside chance that we could get all the way up to the 2034 area or the 2040. But right now, that's just a guess going forward because it's so far away. But I do believe there's more room to the upside. So we want to continue to work on the bullish side. And with that, enjoy the rest of your day. Tomorrow we are off, and have a great rest of your weekend.